Here is the story of Facebook. Facebook got its start at Harvard's Kirkland House dormitory by Mark Zuckerberg and a few of his friends, such as Eduardo Saverin, Dustin Moskovitz, Andrew McCollum, and Chris Hughes. The idea of Facebook began with another site known as FaceMatch.com, where photos of Harvard classmates were posted and students would decide who was hot and who was not. This site was removed due to copyright and security issues, but the idea of people sharing photos with their friends was ingrained in Zuckerberg's mind. A year later, on January 11, 2004, Zuckerberg registered the Facebook.com domain. The founders of the site told a few of their friends, and then they posted an ad about it in the mailing service, which went out to 300 people. Within 24 hours of launching the site, there were somewhere between 1,200 and 1,500 registrants. Mark Zuckerberg is pictured here coding the Facebook website. 6 days after the launch, 3 Harvard seniors, twins Cameron and Tyler Winklevoss and Dia Narendra, claimed that they had reached an agreement with Zuckerberg where he would create a website called HarvardConnection.com for them, but they alleged that he abandoned them and used their ideas to create Facebook. This controversy would later lead to a lawsuit which would be settled in 2008. This settlement caused each person to be given 400,000 shares of Facebook stock that was valued at around $100 million when Facebook had its IPO. This social networking site began to grow exponentially through college students across the country. Within a month, half of Harvard students were members of the Facebook, and by March 2004, the site had expanded to Yale, Columbia, and Stanford universities. Facebook's first ad sales pitch went out to marketing agencies and other companies who might want to post advertisements on the new social networking site. This was one of the first times Facebook was able to generate revenue, and it became increasingly important because the more Facebook users Facebook had, the more money they could generate. It would cost a company $15,000 to post an advertisement on their site. Imagine if a company created an advertising contract for that price that lasted 15 years. In mid-2004, when Zuckerberg was only 20 years old, he dropped out of Harvard University and began to work for Facebook full-time. This is a picture of Zuckerberg receiving an honorary Harvard degree in 2016. Zuckerberg hired Napster co-founder Sean Parker as the company's first president. In June 2004, Facebook moved to Palo Alto, California, into a tiny office downtown. The company was known to be as much of a party hub as a legitimate business. Employees always wore t-shirts, shorts, and flip-flops to work. Employees would also even celebrate and drink alcohol in the office. Facebook got its first outside investment of $500,000 from famed ex-PayPal executive Peter Thiel and fellow PayPal executive and later Tesla founder Elon Musk. This investment was in exchange for 10.2% equity in Facebook, which gave the company a valuation of $5 million. The company continued growing that year, and by December 30, 2004, over 1 million members were registered. In May 2005, Facebook raised $13.7 million in funding. In 2006, Facebook created its iconic breakthrough newsfeed, which gave people a real-time stream of what their friends were doing. This is a photo of the Facebook team launching the newsfeed site. Facebook rejected a $75 million offer from Viacom and later a $1 billion offer from Yahoo in 2006. Zuckerberg was determined not to rush his company's IPO and was satisfied with private funding. He did not believe in selling his company for those low values at the time. Facebook was already growing very quickly, but the increasing popularity of the smartphone allowed the user base to rapidly increase to non-college students. By late 2010, the site was so popular that it had hit 1 trillion page views per month. Facebook had also established itself as a major political power at this point. That was perhaps the most prominent in February 2011's Egyptian uprising, which was largely organized via social networking sites like Facebook. It was around this time that people began to realize that Facebook was more than a place to share photos of their dogs. It was a place to share ideas and influence people. Facebook's domination continued to grow until it became the second most visited web property online. In August 2009, Facebook acquired the real-time news aggregator site FriendFeed, and then in April of 2012, Facebook made a huge splash in the market by acquiring Instagram for $1 billion. Facebook filed for initial public offering on February 1, 2012 by filing their S-1 document with the Securities and Exchange Commission. At this time, Facebook had 845 million active monthly users and 2.7 billion daily likes and comments. Facebook was seeking to raise $5 billion in investment capital, and after the IPO, Zuckerberg would retain 22% ownership stake in Facebook with 57% of the voting shares. The underwriters of this IPO valued the shares at $38 each, pricing the company at $104 billion. This was the largest valuation ever to date for a new company going public. Facebook's roadshow was not very successful. The first showing started out with Zuckerberg wearing a black hoodie instead of the typical suit and tie. Then Facebook showed a 30-minute video about Facebook that investors were not very interested in. Investors rather wanted to talk about the technicalities as much as possible. There was such a high demand for Facebook stock because of the successes of Google and LinkedIn, so Facebook decided to sell 25% more shares than they had originally planned. The underwriters of the Facebook IPO were Morgan Stanley, JP Morgan, Goldman Sachs, Merrill Lynch, Barclays, Citigroup, Credit Suisse, Deutsche Bank, RBC Bank, and Wells Fargo Securities. There were also some other underwriters that played a smaller effect in the IPO. Overall, the underwriters priced Facebook at $38 per share. Facebook had its IPO on May 18, 2012 at 11:30 a.m. Eastern Standard Time, after a 30-minute delay due to glitches from NASDAQ. The price initially rose to $45 per share, but then by the end of the day, underwriters had to purchase the stock to keep it from falling below the IPO price. However, this IPO had a record trading volume of 460 million shares. In addition, by the end of the day, Zuckerberg's share of the company was worth over $19 billion. On the 9th day of trading, Facebook stock plummeted to a low of $27 per share. However, in the 5 years since the IPO, Facebook has nearly quadrupled and trades at over $150 per share today. Over the past 5 years since Facebook's IPO, their user base, revenue, and stock value have grown at similar rates as seen by the graphs in the picture. When Facebook purchased popular messaging app WhatsApp for almost $20 billion, the Facebook stock price increased as well. Today, Facebook has 1.9 billion active monthly users, which accounts for approximately 1 in 4 people on Earth. Here is a clip of a YouTube video made by the Wall Street Journal that explains some of the trouble that had to do with Facebook's IPO and NASDAQ.
When I logged into my brokerage account, I put in a limit order and the stock didn't open, and they said they had to delay another 5 minutes. That 5 minute deadline came and went, and the stock didn't open as they had stated it.
The problem was NASDAQ attempted to do a continuous cross. And all that means is that they were accepting orders right up until the instant, the millisecond, before the time that they tried to come up with the IPO opening price. there was such an influx of orders, such a high volume of orders. When they went to do the cross, the book or the orders were changing, and it was so intense that they got into what they call a continuous loop problem.
Nasdaq has acknowledged that there was a big software problem, and they vowed to remedy that. The interesting thing was that Nasdaq said they stress test this particular IPO in laboratory type conditions hundreds of times, and yet still the software gave way at the most important moment.
I was refreshing my screen constantly, and my trade didn't go through, and I was already seeing on Twitter that the stock had opened at 42. And it was strange because my order hadn't filled. And after 9 minutes of being unfilled, I got a little uncomfortable. And so I put in a cancellation order. Around lunchtime, I checked and saw the stock had dropped, and thought it was a blessing in disguise that I didn't get my shares. And then when I got confirmation at the end of the day that my order had expired unfilled, I thought it was a good thing because the stock had actually dropped from 42 to 38 by the end of the day. So Wednesday morning, as I was getting up, I was checking my email, and I received an email, not even a phone call, saying that I was due a significant amount of money. It was a margin call. And I thought it was strange because I didn't have any big positions that should have been called. So I checked my account. I saw something I'd never seen before. It actually had gone negative. My jaw dropped. I looked down and I saw that the Facebook shares had been placed into my account. I immediately called my broker and asked them what had happened, and they just blamed the Nasdaq delays for the delay in receiving my Facebook shares.
Not getting a trade confirmation. Certainly, traders can be long and lose money. They can be short and lose money when the stock goes up. The worst condition is not knowing your position.
Nasdaq has pledged.
These are the sources that I use for all of the information and photos in this presentation. Today, Mark Zuckerberg is one of the richest people in the United States. His net worth is $63.9 billion, and it's all due to Facebook. I hope you enjoyed, and this is the end.